Welcome to another day in the Matrix. This is Red Pill Podcast number 118. Hope you're all having a beautiful weekend so far. We have so much to get into today. I'm actually going to be doing a full review of Bitcoin, ETH, XRP, as well as Dow Jones, S&P, and NASDAQ to give a full market overview, including the indices. And then we'll be getting into Litecoin, since Litecoin's halving event is about a month away, as well as Constellation DAG, Bitcoin Cash. A lot of you have been reaching out to me about that. Reef, and gonna be sharing some quick thoughts on VeChain. So most of you are well aware that yesterday I released my newest decode called Fed Now Decoded, which is part 3 in the Jubilee series, following up on my last release titled World Reserve Decoded. Definitely check that out if you haven't already. And again, welcome to the Red Pill Podcast. If you're new here to the mastermind community, welcome. So great to have you here with us. If you have yet to get access to the Discord server, just go ahead and send me a direct message on Patreon with your Discord username and the last 4 numbers after your username, and then I will be able to reply back to you in a Patreon message with the Discord server invite. Also, make sure that when we're voting for our coins that I'll review next week, that you leave a comment in the Patreon, and at least 1 year to 2 years ideally of chart history, cryptocurrencies, and make sure to write the full name of the crypto plus the ticker symbol. And then whatever coins get the most votes from the other members of our community are the ones that I will select for next week. So because we're just starting out this month of July, I decided to kick it off with a banger, and I'll be going over many projects today, as I said, probably even getting a little bit into the Bitcoin CME chart, and there's just so much, so I want to jump straight into it. Again, I did release that new Fed Now Decoded, so check that out if you haven't. In that decode, I showed how the Federal Reserve hasn't been completely transparent on the exact date that this new Fed Now service will go live. Many speculated it was to go live yesterday on the 1st of the month, and now some are saying it was a soft launch and that it will officially go live on July 20th. Again, this is all speculation, and until we hear it directly from the Federal Reserve, we won't know the specifics. So today is July 2nd. We're leading into this full moon tomorrow. It'll be on July 3rd, which happens to be on a Monday, a moon day. I talked a little bit about it in the last decode. So the stock market will actually close early tomorrow and be closed for the following day, which is the 4th of July, the United States Independence Day. I've shared a ton of code about that in recent work, so again, make sure you've been keeping up with everything I've been putting out lately. It'll make a lot more sense. Of course, crypto will continue to trade as usual on this day of 4th of July. No breaks, no holidays. You guys are aware of the story. But it's definitely an interesting setup with the stock market closing this past weekly candle at new yearly highs. So I'd actually like to take a moment to go over to the traditional markets now in the charts and review what I'm seeing in the charts for the major indices, such as the Dow Jones, the S&P 500, and the NASDAQ. So I'm going to just go do this at the beginning because I feel like separating it might be a little helpful. Again, we have many members here that are interested in all of what's going on in these markets, and a lot of you are aware that if the stock market was to have a really big correction, that ultimately crypto will most likely come down like a fallen wall. So we need to be aware that right now we see that this market is pushing up in a way that is almost nonsensical. It hasn't really had much of a reason to continue up, but it still does, kind of showing us that the Federal Reserve basically runs this market. And, it's la la land. We've been talking about this a lot lately, so with this new Fed Now system rolling out, it definitely feels like a setup moving into late July. We've spoken a lot about these ideas about the wild card month of July, and here we are. We closed out this Friday, and if we look at weekly candles, we could actually see that for the most part. I'm gonna just zoom in for you guys. I'm going to turn off some of these indicators. For the most part, we're essentially on new yearly highs. This candle right here of November 2022 So yeah, we have the Dow closing last week, new yearly high. Obviously, S&P, it's pretty clear that this is rallying very hard. Over here we have the Nasdaq again. It's silly. It's really silly. So let's break this down step by step. Of course, we like to use these fibs. We like to be a little bit more open-minded with some of the esoterica, but I just want to keep it very simple for everyone and just give you a quick overview of what's going on in the stock market. So just to remind you, we're on a weekly chart, so these are weekly candles. This all-time high going back to January of 2022. This red box is the time frame of the Shemitah, so this red box starting on September 2021 and ending on September 2022. And this theory that I shared years ago, before the Shemitah even started, even publicly on Coach JV's channel, 3T Warrior Academy, I talked about how it's very typical for us to hit highs into the start of Shemitah, and then we tend to have very dramatic pullbacks into the end. And isn't this clear when we look at a weekly chart on the Dow Jones, just how cyclical this Shemitah cycle tends to be for the overall market? Now, what we also are aware of it takes about 1 year since the end of the Shemitah for the market to really bottom out. It doesn't happen every single time. Again, we have over 100 years of chart data for the overall markets, but this is seemingly a setup of a bull trap where we have this big pump up into this golden pocket territory. It's had many rejections at this level. We have about 210 days of seeming to hit resistance around this 34,400, 34,500 level. Then we have the technical level to the upside of the 786. That's the top of your golden pocket. That's really a level where it tends to get overheated and we usually get reversals. So I'm just going to show you the RSI right here, and we're hovering into that 57, almost into 60 territory. Really not a whole lot to say here. We are looking at an indice on a weekly chart. Of course, if I was to go to the daily, you're going to see we are really starting to move to the upside. I mean, we're going on lower highs though, so that's not great. But lower highs in the price pretty much as well. So we're potentially planting some divergences. I don't want to get too deep into that right now, but we have this trend line here that I'll show you on the daily. I'm just adjusting it slightly so you can see how textbook that this bounce was. Again, we're looking at trend lines. This is like the tertiary part of my analysis. I like to use them just to make things a little bit easier to understand, especially if you're newer to TA and you're newer to the charts. And by the way, I've been getting amazing feedback from people who've invested in my crypto mastermind course. That's available to you guys as Patreon supporters with the biggest discount available. It's a 20% off discount. And that crypto mastermind includes my exit strategy blueprint completely for free. And that's the same exit strategy that I will personally be using in this de-risking process leading into perhaps later this month. Of course, we just have to let it see how it plays out. But if you were to be invested in, for instance, something like the Dow Jones, and you had that exit strategy blueprint, you would have been able to take profits at these key levels. And overall, we're getting these rejections here. I just brought it up before, but this is a very bullish retest that we just got. So I don't want to go ahead and get into patterns necessarily, but this could be an inverse head and shoulders, which does tend to be a bullish pattern. And if we were to measure it, I should be in log scale to linear scale to do this. One moment. That's as simple as just clicking Option and L together if you guys want a little bit of a cheat code, but I'm just measuring here. I would personally like to do it off of weekly charts, but just to show you, this could actually move all the way up into somewhere around this 3600 level. That would be wild if that plays out, but with how bullish this backtest at this neckline is, I mean, we really need to see. What I would like is for this Dow Jones to just chill out for a minute. I noticed when we started to move up a little bit and started to get stagnant for the overall indices, that was when we saw Bitcoin recover off that 25,000 retest last month. So if you think about it like this, when the stock market is in more bullish posture, but then calms down and kind of just gets trapped within a tight range at a bullish, level, we tend to see Bitcoin catch up and it gets bullish then. And then when Bitcoin gains dominance, we might not see immediate results in the altcoins. But then when Bitcoin stalls out, that's when we start seeing alts catch up. And they obviously have even more gain potential. We're seeing this right now with things like Bitcoin Cash. We saw it with VeChain. Tons of coins, Litecoin, and there might be a separate reason for that. But again, I hope this stuff is helpful for you guys because it kind of gives you a holistic understanding of how this market operates. So I would personally like this to just chill out a little bit. But we don't know. We do have about 3 weeks leading into the next FOMC meeting, and it's kind of like, the wild, wild west right now. So technically, this was a very bullish back test. Bounce off the 618, which is the bottom of the golden pocket. We're seeing low, higher, low structure. We're seeing high, higher, high structure. We do have this trading back in 2022, but this year so far, we're on new yearly highs. It's looking very good. If we were to start clearing this level of about 34.6, we could actually move into 35,000 points. So on the downside, we would start closing 2-day, 3-day candles below this trend line, and I suspect a retest of the 0.5, and then any break of structure, which would be closures below these prior closures in May, would send us down to the 236. That's typically how this works. So just keep that in mind. And overall, I shared in my Fed Now Decoded that I still see a larger correction to come for the overall market. All this that I'm going over now is just to kind of further the thesis of a automatic rally for Bitcoin and the finality of any bullish energy in the crypto market before the market turns over. So when we're seeing the market operate the way this does right now, it's beautiful actually as a crypto investor because this is big money here in the S&P, NASDAQ, and Dow. If that was to just a little bit of it was to spill over into something like Bitcoin, Ethereum, etc., that we could see massive moves in the market. 100%, 200% in just a week. And that's typically how automatic rallies tend to end. But now looking at the S&P chart, got a big gap here that just formed and now closing on another daily high. This is really looking to get overheated pretty soon and clearly on its way up to the top of the golden pocket, the 786. Again, I've told you guys many times, that's about where we tend to roll over. So what's very bullish about this is we've had a much larger correction, but we have had a trend reversal thus far. Lower high, higher low, and then we have this back test to the 236. I'm just going to shut off my phone really quickly so that I don't get interrupted on this. All right. So we've had multiple tests of the 236 and then bouncing and getting back above the 0.5 fib is a very bullish thing. So this almost looks like a complete reaccumulation on its way to what I would call an SOS. This is actually an SOS in Wyckoff, and that's wild if we were to consider this as the AR. The reason I don't want to go there just yet is because I like to look at the indices in a much more macro view. So if I was to turn off all this noise and just show you the candles, I actually feel like this is the buying climax, this is the selling climax, and now we're in the finality of the automatic rally. And this coming to an end, rolling over, going back to the 236, which is about 3,800 points, and then double bottom and then lights out. You usually have a return back to these larger correction lows, and then I would see a support somewhere around 2,500 initially. So that could be a pretty bloody rejection pullback. If we were to look at the top of the golden pocket, if we were to hit 4,500 points, this could actually reverse all the way down to about here. We're looking at a test about a 44% correction, and if that was to happen in the S&P, wow, would that be dramatic on altcoins in the crypto market? Not even a full 50% correction, which we tend to have in the S&P. And as I said, my time frame for that would be the end of this year, sometime around October. So wow, the overall markets, and I'd imagine mainstream media is really going to be pumping bullish, positive narratives around these levels, when back here they were bearish, right? It doesn't make any sense. They always kind of trap people in sentiment. And you guys know the way of the wolf is you buy when there's blood in the streets or you buy when it's boring. I always say this. I've been saying it now for 2.5 years since I created the mastermind course. Buy boredom. Buy when they're telling you that it is the worst time to invest. Sell when they're telling you that we're going to the moon. You keep doing that, you're going to do pretty well in this market. And this is basic stuff. You've heard it before. Now we're going back to the NASDAQ, and this is clear as day to me, an automatic rally. We have buying climax, selling climax, sharp, what I would call a bear trap down here into another bull trap. Of course, some people might be wondering now, well, Waters, what would invalidate the automatic rally? Well, simple. Price discovery, continuation onto new all-time highs. So it would take us to break up above prior highs of 2021. Until we see that, this is still kind of what an automatic rally is. We have a top followed by a much larger and noticeable correction, which then leads to a relief rally perfectly into the golden pocket. That's exactly what you see on an automatic rally. Then after the automatic rally, you go down to typically your 236 and then double bottom and then lights out. You usually fulfill a much deeper correction that we call a spring. This setup is something essentially we got back in, let me make sure this is correct. Boom, there we go. This is kind of the scenario that happened back here, but on a smaller scale, where we come down, bull trap, boom, and you see the bull trap coming into the bottom of the golden pocket. Then here you could see bull trap coming into the golden pocket, rejection. So this is your automatic rally. This is your automatic rally. We just have way more money in this space right now, and we got through an insane amount of printing of the Federal Reserve right around this moment. So it is not the same, but it has a general kind of footprint layout. And this was your .com bubble, which highly affected this particular chart we're looking at right now, the NASDAQ, US 100. This was brutal. I don't think we're going to have a repeat of this because I believe the world is moving tech. We're moving into more virtual reality, augmented reality, self-driving cars, all that stuff. You guys are well aware of this. We're heading into transhumanism, so things like blockchain and tech, I don't believe are going to go through this same moment anymore. But the old antiquated stuff, perhaps it could be going through some more noticeable corrections. Also, people are losing faith in some of the things like the medical system and government and the things that they were investing in perhaps during the C-19 crisis. One moment. All right. So, next level up for the NASDAQ is the 888 fib. I can't even believe I'm saying it. It would be around 15,800 points. It's really wild. But what I want to say to kind of be a little bit more level-headed and conservative is that I would not be surprised if this is topped out. I would not. We can trade here sideways for the next 3 to 4 weeks into the start of August, and then that could be it. So keep that in mind. Now, lower targets or invalidations would be breaks below the 618. So this is kind of weird because it gives you a huge trading range. That's what's odd about the golden pocket. And to really master this Fibonacci retracement tool, you have to go through tons of charts, look at penny stocks, look at all coins, look at the big major indices. I challenge you to and pull these fibs in larger time frames and smaller time frames, and that's really what's going to allow you to become a master of this particular tool. Again, I teach everything regarding how to utilize this in my crypto mastermind course. We talk about it a lot in the exit strategy blueprint on taking profit, conservative levels plus in price discovery, and then I really go deep with it on the advanced trading course, but that's only for people who've already completed my crypto mastermind course and are ready to take the next step into perhaps being a little bit more active in trading. Now, I believe we went over the key points here, but this NASDAQ getting into an overbought territory on the weekly chart is a sign. So you can see we got to about 75. That's pretty rare. This was your C-19 crisis when we came all the way down into potentially oversold. We just tapped right there at around 30 RSI, and then we boomed up all the way to 77. It was a V-shaped recovery, obviously manipulation to liquidate people and to create fear, and it did its job. But now we're seeing retest back to similar extended levels. It's exhausted is essentially where I'm going with this. Now look at this bi-weekly. Just straight line RSI. This is not healthy. So yeah, we closed that bi-weekly on a new high. What can you say? We're going to be opening it up on Monday. We'll see how this reacts. But I gave you guys all the theory here. Keep it all in mind. And this will ultimately affect crypto on this upcoming opening week. And perhaps, like I said, we have that holiday. So we could chill out a little bit in the indices, maybe for a couple of days. And then that'll make that day where crypto's trading alone pretty volatile, I'd assume. So again, pretty much I just said it moments ago, this upcoming stock market holiday in trading, crypto trading alone, you could expect some volatility in crypto in the market on 4th of July and perhaps increased volatility when the market reopens on July 5th. So I've given you guys similar warnings in the past. Just don't even look at the charts on a certain day. I've said this probably a couple weeks ago, and ultimately I had my reasons why, and you probably have lived through enough of those warnings, and you're thanking me that you did. So this is another one of those warnings, just expect volatility over the next week. We just entered this new month. Bitcoin's kind of trapped here at this 30,000 level, and the stock market's on a new weekly high. So what could you expect? Expect lots of news, narratives, and drama. You heard it here first. So getting back to some of the dates, last week we reviewed this 7-7 date as the 777. This could be perceived because 2 + 2 + 3 this year we're in adds up to 7, although this is with the Gregorian system, considering July as the 7th month, when it's actually the 5th month. So if we want to get technical, it should really be September 7th is the true 777 date this year. Septem is Latin for 7, like October, octagon, 8-sided polygon, right? So this calendar we use is misleading on purpose. It might confuse some people if this is their first time hearing this sort of stuff, but I'm sure if you've listened to some live streams, you're well aware of our stance on all of this. They're hiding truth in plain sight, but they're also misleading you with some of the most popular things that are right in front of your face, because that's the best way a magician could get away with the spells they cast on you. So getting back on track, July 7th is very interesting actually because it ties to March 10th. That was the day that Silicon Valley Bank failed. We've been referencing this a lot lately, and it ties to it by 119 days, the 119, which is the mirror of the number 9/11. You guys know about that ritual. And since this exoterically is the 777 date, those 3 sevens add up to 21. 7 + 7 + 7, that's the jackpot. 21 right there in the standard date numerology. This ties back to Saturn, and you could see right there Saturn giving you that 21. And remember our next solar eclipse, which is on October 14th. I'm going to show you that right now. October 14th on a Saturn day. Keep that in mind, okay? Especially since we're just leaving Jubilee year. This will be within 1 month of that time frame. It's very critical. Now, since some people have speculated that July 20th is the actual date that FedNow goes live, we can quickly check out that date before we get into RTA. And you're going to see right here, we have July 20th giving you 201st day of the year. We were just talking about 21. You remove the 0 with the rules of numerology, that's back to 21. Again, very important number for crypto. So that key number 21 tied to Saturn. Just a reminder, this ties back to Bitcoin because Satoshi Nakamoto, Satoshi is Saturn, the mythological creator of Bitcoin. And there's a very key reason why there are 21 million Bitcoin in supply. There you have it. And speaking of the number 21, the next Federal Reserve FOMC meeting is scheduled for July 25th and 26th. And if we go over to July 25th, 725, we are going to see how this lands on a 21 date numerology. Again, more 21s. So the next Federal Reserve meeting just so happens to perfectly land on that 21 date. That date is tied also to the first day of Rosh Hashanah. So let me show you this. That'll be September 15th. The reason this is critical is because it is tied to the first day of Rosh Hashanah. by 52 days. And this 52 number is significant this year because we're in the year of the rabbit. And I've shown you guys how rabbit equals that 52 in just basic English ordinal gematria. And we have cryptocurrency. Let me spell that correctly, even though it doesn't matter as long as I use the right letters. Cryptocurrency equals 52, again, tied back to this. So anything with that number 52, like we have in the year of the rabbit 52, influences cryptocurrency, which has 52, which also short for cryptocurrency is crypto. The mirror of 52 is 25. This is tied to Bitcoin, BTC, the ticker symbol is 25. You probably remember that during the 25th week of this year, Bitcoin was trading at 25,000, and then it moved up to a new microcycle high in the same week, just straight line from 25 to 31,000. So it shows you how scripted this all is and how important it is to consider that year of the rabbit decoded that I released here some months ago. Now, oh, and don't worry, I will be coming out with a Year of the Dragon decoded. I might even come out with it with a little bit earlier, because I think that'll be fun to just come out with it maybe near the end of the year. We'll see. I don't want to make any promises, but I know many of you are interested in that. Of course, I'm saying all this around the 25th minute of this podcast. Shows you how dialed in we all are. One moment, I'm just going to take a quick sip of water. All right, lemon water, so good. Now, the last thing I'll share about this next FOMC meeting is this amazing connection back to March 10th. So we have over here, this is the date of the FOMC meeting, and here we have March 10th, again, the day Silicon Valley Bank fails. And this was pretty much the last time Bitcoin traded below 20K, traded at 19K for like a moment, all right? So from March 10th, 2023, the day Silicon Valley Bank failed, to July 25th, 2023, the date of the next Federal Reserve FOMC meeting, is exactly 137 days. That's so important because 137, some of you are probably aware, is your 33rd prime number. And remember all those 33 connections that I shared with you yesterday in the Fed Now Decoded? So this adds even more emphasis to that key date. But wait, I'm not done blowing your mind just yet. Remember how March 10th is the 69th day of this year, and how 69 days after the 111th anniversary of the Titanic, they did the Ocean Gate Titanic submersible ritual? I talked about it in the last Red Pill podcast. Well, that 69 and 96 code is pretty much the most important code that I've found since Bitcoin topped out at 69,000, and it's not only directly influencing the crypto market, but the world stage as a whole. So, for instance, the Queen died at 96 years old in her Platinum Jubilee, 70th year as Queen. Now we're in the year of Biblical Jubilee. You see, whether using this number sequence so much. So if we take from the last solar eclipse, which was on April 20th, let me show you this, connected to the next FOMC meeting, it is 96 days. So from the start of our solar cycle, which is a 2.5-year cycle where Bitcoin tends to go through its halvening and also reach new all-time highs, this is amazing that this connection is here with this next FOMC meeting, specifically because this is right around the alleged launch of the new Fed Now service, right? And it's 96 days. How perfect can it get? And of course, the date this Ocean Gate Titan started its journey on June 18th. Let me just show you that date right there. It was the 169th day of the year, with the day leaving 196 days in the year. Again, that's 69 and 96 code right in front of our face. So also, you could probably remember how the Shemitah back in 2022, it ended on a 96 days left in the year date. So they will continue to ritualize this number of 69 and 96 without a shadow of a doubt. And this is why I'm confident about the blue moon in August, around August 30th into August 31st, being ritualized. Don't forget it. Mark your calendar. You heard it here many, many months ago. I talked about it, I believe, in like Red Pill Podcast 107. And here we are, we're at Red Pill Podcast 118, about 11 weeks later. So just so you're aware, this code, I'm going to quickly just show you because of this ritual that happened on 6/22/2023, and then we were talking about the date of August 31st and August 30th, which is effectively your blue moon. You have here August 1st will be your first moon, and August 30th will be your second moon in the same month. That's your blue moon. You tie from the day that this Titan submersible was founded after, the search party or whatever went down. And that's 69 days leading you into August 30th, the blue moon. Following day and one day after that ritual, again, this will be the official date that I've been considering the most. So it's perfect, right? 69 days is also 9 weeks and 6 days. So it's sort of a perfect amount of days. Well, the Wolfpack is more than prepared for this. We have a full 2 months between now and this date. I can just show you really quickly. Here we are at 7/2, and that's 60 days away. So it's important that we position ourselves for any necessary de-risking of overexposed positions when our targets hit. And this is not a time to mess around. And of course, this is not financial advice. I'm just sharing how I feel about what I'm doing personally and what I'm seeing in these charts. And I believe some of you probably remembered my warning to the HEX community back in January, specifically the HEX community. Back in January of the start of this year, I gave a firm warning of potential 12-cent automatic rally for HEX. And I told them that it's not smart to get greedy if these levels hit, because a bigger correction after is highly likely, regardless of the Pulse chain launch. And we see how this turned out. We got about 90+% losses off of that automatic rally. So this is important. Again, this shows clear signs of weakness at this level too. There's been very little recovery. And I'm not trying to hurt anyone's feelings here. This is the Red Pill Podcast. These pills are tough to swallow, but trust me, removing your emotions from this game and having clarity while you analyze these charts and utilize this decoding system will allow you to position yourself effectively and stay profitable for the long term. That's what this Wolfpack is all about. So when I'm sharing these ideas, it's so that we could secure any wealth that we've accumulated. And we talked about this a little bit yesterday in my live stream, that it's not as important to make money as it is to be able to keep it. So many people, they're able to make it and then they lose it all because they have greed get in the way. And we're one of the few communities I think really talks about the mindset as our priority, but ultimately removing ourselves from the tribalism to get that clarity. Because when you have that tribalism attached onto one particular product or one particular coin or whatever, you're now kind of tethered to it. And it controls you rather than you playing the game plays you. And this doesn't really help you harmoniously. It doesn't help your well-being. It only feels good when the market's going up, and then it feels horrible when the market's going down. So we're trying to break free from all of that and just break all the shackles and see it for what it is. Again, to play the game so the game doesn't play us. So let's get into the charts and do some TA on this market. I'll probably cover HEX again in maybe a couple weeks, but for now we need to get over to Bitcoin because we have a lot to cover in today's podcast with these charts. One moment. All right. So we have Bitcoin here trading into about 31,000 a couple times, and it has continued to get rejected. But now we have a bull flag within a bull flag. This happens sometimes. If I was to put us back into a linear scale, give you an idea off of daily closes to daily closure highs about what to expect if we were to have this play out, and I'm going to go off the extremes on the downside because that's more conservative. You can see where that brings you actually to this target 1618. I should adjust this to be blue. That's the color I like to use. There you go. Okay, so where you're getting this 1618 is by pulling from the April 14th high. That would be your current micro buying climax down to this level right here, which would be June 15th, just a couple weeks ago when we traded slightly below 25K. And you could see where this bull trap concept brings us into. It's essentially this 1618 off of this fib pull. So consider that 34 or 35,000 is essentially our next level. Now, if I adjust this, it's going to show you where this is bringing us, and it's slightly above the macro 0.5 fib. So I'm sorry that this is getting in the way. It's just the way it's set up. Let me maybe adjust this to the downside. I think it'll look a little bit better. Values at the bottom. There we go. Okay, so now I'm going to scroll out. And of course, when I say a bull flag within a bull flag, I'm talking about this little flaggy guy hanging out right here. And then we have another flag that was here, and this has a much more dramatic story. But if I was to go off the weekly, and I was to pull from this weekly close, this is like a very conservative way of doing it, by the way, up to this level here, we are looking about a play, gets us right into the 0.5 fib. That's super conservative, by the way. Normally what people would want to do is pull the whole thing. Excuse me, I'm gonna pull this, which it's not my favorite way to do things because I always like to be a little bit more conservative with crypto, but ultimately because crypto has so much volatility, it's not necessarily weird if it was to happen. So we have 2 points and they're just kind of snaking around this 1618 target. I'm going to go ahead and save that. I'm going to bring this back to a daily and we'll see what we're working with here. Now, what we were talking about before was this 0.5 fib on the macro. To just remind you guys, this is a fib pull from the current all-time high all the way down to this local low, which is November 22nd, about 15,000 Bitcoin. You guys remember when Bitcoin was 15K and how negative this market was? And now we are here and Bitcoin's up over 100% from that moment. And yeah. We've had so many bearish things actually happen between then and here. I mean, you could probably name it on, you need 2 extra arms to name all of the shitty things that have happened in crypto on each finger. But jokes aside, we can clearly see that there's a potential next move up because Bitcoin has made it to a new daily closure high and it's starting to peek its head over into making the next move up, and that technical target would just be your 0.5 fib, and we have this bull flag idea into this 1618 on the micro pull, and then we have this larger bull flag that I pulled from here over, and that gets you right below the 618. Now, typically Bitcoin, I'm going to remove this, by the way. Typically Bitcoin likes to get to this 618 target, at least. And that's not in this scenario necessarily when we're talking about a macro automatic rally that's multiple years play. But at least when we're doing some analysis within a 200-day or a 300-day, a 1-year concept. I don't want to get too confusing to people right now, but just hang out with me. If we were to have this play out where Bitcoin takes it one leg higher, we have some horizontal levels to consider. And this one right here, I think is very important. I'm going to show you a horizontal ray. And it's right about there. I'm going to pull it across the whole screen so you can see what I'm saying. It's 37,700. We have rejections here. We have this break, which sent us into price discovery. Then we have holding a support here with a little bit of a spring action. Once we got above it, we pretty much recovered to a new all-time high. Then we tested down on it after this full end of 2022. And once we broke below it in May 2022 and then seemingly got rejected at the bottom of it, we cascaded into another leg lower. And that was really the confirmation of what people like to call a bear market. It was this moment here, which was an eclipse. So this level right there is this 37,000 and 33,000 level is something I'm keeping in mind because it's a level we haven't really filled out too much. You know, we like to back test it. We like to get rejected off of it. We like to play around with this red line and this yellow line. I do see us trading into that if Bitcoin was to make one more move to the upside. And of course, that'll bode very positively for ETH and the other altcoins. Now, this idea of a 40,000 plus Bitcoin is not off the table, but I'm not gonna give that any prana at this time because Bitcoin is definitely struggling a little bit at 30K. We are kind of in a weird time right now, though, where Bitcoin traded into that level so quickly and it's not healthy, and it really requires just a little bit of a chill moment before it could actually go one more leg up. And you see that in the structure of Bitcoin year after year for the past decade. Now, I'm confident that this is possible because we haven't really exhausted the RSI on weekly or anything. We saw here at the last automatic rally on the weekly, moving into this level right here, RSI reads of about 80, and today we're only sitting here at about 62. We had an RSI read come in about 70 back in April, and we're, definitely have a lot more room to the upside. So let's now move on to what we like to do, which is just remove every indicator and analyze the candles. We have the bi-weekly. It's going to be closing today. How bullish is this? I mean, closing this bi-weekly, especially above this solar, I think this was a lunar eclipse moment right here, and above that prior candle and above the break candle on May 9th, that is really good. So if Bitcoin can close above 30,500, that would look fantastic. Ideally, if it could close above 31,000, that would look really good on a bi-weekly. Let's analyze our monthly because we did just close a monthly candle yesterday. We closed on a new structural high. So this looks like a trend reversal. We have high, 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 and again, closing on a new candle high, kind of disregarding May. We don't need to worry about that anymore because of how bullish this recovery was. Can't really say anything negative about that. Okay, now we're looking at this closure. Okay, wow, we closed it bi-monthly too. So that's really nice. I would be surprised. Let me see over here. Look at this chart. Yeah, I was expecting that. Red dot. It's still looking good on the, okay, yeah, beautiful. And we haven't looked at this chart in a while, but this 247-day chart we used to talk about quite a bit is looking nice with these two red lines here coming in on July 10th and July 14th, right around that 11th date that we've been talking about, the day before Julius Caesar's birthday, and then another big date coming in on the 26th. So let me go 247 days backwards and see where that connects us. Oh, snap. Okay, so that connects us to the bottom, November 21st, when Bitcoin hit its lowest low in this current cycle. You go over 247 days, it's hitting into July 26th. Wow, that's insane because that's the date right after, or the second day of the FOMC meeting. All right, well, there you have it. That's another piece of esoteric analysis. We don't want to consider that necessarily as the most important, but thus far, this 247-day cycle has been pretty mind-blowing. So the 3-month or the 2-month looks great. Oh shit, we closed. Okay, we closed it quarterly, yeah, we closed a quarterly. Yeah, beautiful. I mean, dude, what could you say at this point? That's one thing that's interesting. We closed that quarterly and now we're technically above that 8 moving average. And that was kind of the case in the last automatic rally. We do have data. Okay, so there you could go. You could go see back. It did happen in the 2015 into 2016 recovery. Well, that's very big. One moment. So you can see right here a very important cross. This is your 8 simple moving average getting above your 55 simple moving average on the monthly, and now the 55 and 8 are still sloping to the upside, and we've been able to maintain now going on how many monthly candles? We're about 180 days of monthly candles above it, but 2 confirmed since the cross. It's very good. We're above all of these EMAs on the monthly. We've had the 13 moving average cross above the 34. Wow. It's looking really good. It's crazy. Yeah, Bitcoin's looking solid. It's looking kind of like the way it did back in 2015 into 2016. Seriously, it's like mimicking it. All right, so this is one thing to consider. We have this bi-weekly candle that is closing today, and we have that 55 simple moving average above us. If we can get above that, that's really the territory to anticipate the finality of the automatic rally. So we have that level sitting around 32.6. Just keep that in mind. 32 to 33 is really where we hit that 0.5 fib level, that key level. 200s below us are looking great. We have the, wow, 13 has officially crossed above the 21. It's now on its way to cross above the 34. That could happen next week. We're back above the 8 simple moving average. That's looking amazing. We're on the weekly now. We pretty much have everything in a bullish posture. We have the 8 above the 13, above the 21, above the 34. We have the 200 fully tested. And look at this 200 exponential. We definitely back tested it with a bullish bounce. So that's a very important thing to take note of, because if I turn all this off and let me just for one moment turn everything off except what I'm talking about, you can see how this plays. You get this 200 exponential on the weekly. When we broke below it back here in June, we went on a deeper correction. Then we got rejected off of it back in February. This was your Silicon Valley Bank failure and the last time Bitcoin traded below 20K. Then you have this recovery back above the 200 exponential, but no back test until just a couple weeks ago. Then right after back testing it with this really arduous kind of, downtrend, boom, popped out of it. So that's a very bullish back test. You got rejection confirming resistance. Then you have your bounce confirming now it's a support. That's crucial. You could see back in the C19 crash, if you were aware of this 200 moving average, it was a nice position to be in. Now, one thing to mention about Hex, and this is just like a quick side note, is you see this structure over here where Bitcoin dumped hard and then came up to this 200 on the weekly and then got rejected off of it for like a weird higher low. That could be the case with Hex, kind of mimicking this 2018 winter time, I would call it, like the 2018 into 2019 winter. Just food for thought. How it's recently rejected. I mean, I still think it could go lower. I think it could go to 0.003. Definitely into October for sure. That's kind of a confident thing at this point, unless something happens with the project that's positive, but I don't think so. Again, not to hurt anyone's feelings, but I would look back at some of these older Bitcoin charts because there could be something there. There really could be. But getting back to this, getting back above the 200 exponential has seemingly been a very positive thing for the ending of your bullish momentum, or the expectation for bullish momentum. Sorry, that's the proper word. Okay, so on the weekly, we're looking amazing. Like if I was to turn this off, you see all of these EMAs in bullish posture. Now let me turn back on the other important stuff and look at just our 5-day, 3-day, 2-day. We have nothing really to say here. We have a 5-day closing on the 4th of July. Big. We have a 3-day closing tonight. So this 3-day getting back above 30,800 would be good. That was the high in the structure of June 21st, the solstice. Okay, really nothing else to say here. We're maintaining bullish. We have low, higher, low, higher, low. We've bounced off the 200, very, very bullish sign. And now we're here. We have this cross of this yellow moving average above the 55. That's your wolf cross. And we have to maintain that 8 moving average. And then from now on, we know that this 200 EMA is your key pullback level if we're going to have any more extreme pullbacks. Wow, okay, the 12 hours looking pretty good too, because you see right here when we had this 55 simple cross above the 200s, which is pretty much in play right now, and the 200, the 55 extend above the 200 exponential, that put us in a really good position for another leg higher. That's about to cross on the next 12-hour candle, which I assume will be your daily close. So this is looking really good. Unless the market maker opens up the CME and opens up the Dow Jones and precious metals and just starts hitting it with shorts, this technically looks like a good setup for another leg higher. Now, we're looking at the CME chart. It is important we go over this because we have that upside gap we've talked about a couple times, and Bitcoin is within a kiss of the 0.5 fib on the CME chart. Holding the 382 and having this bounce still looks like automatic rally to me. And we have this upper gap closing at about 35,200. So that aligns really nicely with the theory that we can get to like this 37K. And I showed you that earlier. We'll leave it at that. I've given you guys enough on the upside. And the downside, we have this trend line. I'm not, again, reminder, like, it's not all about trend lines. I rather play the horizontal market. That's why I love Wyckoff. But when it comes to this, it's pretty clear as day. We had this touch on the recovery, touch, recent touch bounce. We keep bouncing off of this. So, I mean, let's maybe just analyze from touch till it gets exhausted is 50%. From this touch till it gets exhausted, it's about 60%. So we have about 55%. Yeah, it's about 37,000. So it's the same thing. It's the same story. It gets you into the 618 right there. So that would be really sensible, especially if you think about the code, right? We have 37 is 3 sevens. That's 777, more esoteric. And we talked about that idea with the 777 date coming up soon, just like a joke. But now we have actual technicals showing that we move about 50% to 55% off of these back tests from swing low to move. Yeah, and that brings you, 37K, 38K, right there at the golden pocket. Beautiful. So let's move on to ETH. It's probably not a big update on ETH just because what is there really going on? It's the Bitcoin show right now. Okay, so we have a similar lower trend line on ETH, which is holding really nicely. We have this touch point going all the way back to November, then another touch December into the end of the year. Nice rally, retested back on March, right around the Silicon Valley crash. We had this little dip below it, but ultimately strong bounce. And we're looking good. And then we had this trend line resistance, which is back tested and broke. I'm going to go ahead and delete this now. It's not as crucial. I'm going to go ahead and extend this trend line, though. I do feel like it could be important. And we already hit the 0.5 fib on ETH. So we've talked about this before. If we go back to the last market cycle where we have the swing high to the swing low right there, you're buying climax to selling climax, an automatic rally, we only hit the 0.5 fib. Going to today, we perfectly hit the 0.5 fib. You could see it right there. ETH hit 2100. Again, that's funny, right? 21 is 777. So that could be the end, and it wouldn't be shocking because remember, Ethereum hit its low in the cycle back in June, while Bitcoin hit its low in this cycle in November. Then we see the top come in at this level right here, and now Bitcoin has already started moving up again. Could that be the case, that we've just squeezed in this, and now that's it for ETH? It's already planted its lows, and it already got its automatic rally, and it's very textbook. But I do want to entertain the idea that if Bitcoin goes up to 37, 38K, usually we see recovery on ETH and a little bit of rally for ETH as well. The difference between this time back here and today is Bitcoin dominance. Bitcoin dominance got all the way up to like 52. Funny, right? That it hits 52 in the year of the rabbit 52. Anyways, we've seen this insane rally on the BTC.D, and I wouldn't even be surprised that at the end of the year we start getting into like 55%. One moment. Okay, just need to take a quick sip of water. And now we have ETH dominance having a little bit of a rejection off of about 20%. It's all good though. Really not too much. Been on a sustainable rally since, and this does make sense because I believe a lot more of these shit coins are going to wash out into ETH and the top market cap. We could call them blue chips. One moment. All right, just needed some water. But really not a whole lot to say on Ethereum. I think it's just going to follow what it usually does. Let me maybe bring up the biweekly, see if we could say anything about it. Okay, EMAs are looking really good. We're potentially closing this bi-weekly on a new high. And then we have this high right here going back to August 22nd, closing at 1,935 ETH. We're right there. So if we could close above that, that'd be insane. That'd be really, really nice. And we're in a different posture then compared to now, where you see this red moving average at the top, far below the 20 and the 13, the 21 and the 13. Well, now we could see the 13 and the 21 are coiling together, and that's about to cross. Whilst over here, it was crossing to the downside. So we're squeezing between these EMAs and they're flatlining, and then price is starting to trade above, while back here the price was trading below these EMAs. So this is a lot more positive. And the RSI is just meandering to the upside above 50, which is bullish territory. It's looking very good. Way better than back then. You see this just dramatic rise and crash. Well, lately we've kind of shown a lot more maturity in ETH. I'm so like I don't want to say like I'm happy or positive that I did this, but I'm really now seeing the merit to my overall thesis on carrying a majority of my positions in Bitcoin and ETH and XRP. I mean, it just, to have like 70 to 75% of my portfolio be those three, it's been so nice over this so-called bear market. And I did reaccumulate, but bigger accumulations in Bitcoin, Ethereum, and XRP. I think XRP actually moved up to my second biggest position regarding fiat money that I put in it. But yeah, I'm in profit in the overwhelming majority of my portfolio, even just regarding the past year and a half. Of course, I got into ETH at around 400 as my initial, but that's kind of unfair, right? Because it's just a game of years. As you're in this for multiple cycles, but if I was to just think about this yearly performance, having about 75% of my portfolio being XRP, Bitcoin, and Ethereum, wow, like it's really, really a good play. And then you don't have to worry about these dramatic losses on alts. And now alts are fun to swing trade if you have the time, if you care to, or if you can just set limit orders if you like. But it's a lot more of an active game. And if you were in my position, I just don't have the time. I'm focused on way bigger things, and I'm not disregarding the merits of being a skilled trader. I used to be really, really, really active in trading. But now, yeah, I'm just seeing the positives of holding those three in the top three and in those higher percentages. It's really easier to sleep at night. And this is showing a lot more maturity than it used to regarding the ETH chart. So yeah, I like holding about 20% ETH. I think that's really, really good. And when we have a big shitcoin washout, probably in October, I think ETH is going to be the place to be, because all of that's going to go back into ETH. My theory. Let's move on to XRP. It is starting to rain outside, and it sounds beautiful. I love the sound of rain. All right, XRP is really needing to get going. Slow, boring. By the way, I do have an interview coming up in a couple days with Bearable Bull. A lot of people are looking forward to that. It's going to be on the 4th of July. I don't know if he'll get it out that same exact day, but I'm really excited to do that with him. Let me turn off some of this and just see what's going on with this white trend line. Okay, so we have this trend line drawn off of this wick low into a couple of these. Okay, now we're starting to trade below it and get rejected. That's not great. But let's clean up the trend line. There we go. I'm not even going to consider this a wick. It's nonsense. So we're really playing the wicks on the downside, and this is much cleaner. You can see it's touching a lot more of the bottom holds. That's not giving it any slack. That's just a much cleaner interpretation of that trend line. Ooh, we're really coiling. Okay, so there is a little triangle forming. You guys know that I troll the triangle stuff all the time just because it's what most crypto YouTube was. I don't know if it still is. If it still is, then that's very sad. But yeah, we're getting close. And if I was to consider this the starting point, measuring to the apex, coming in at around July 31st, that's 126 days. I'll just show you how to do this, times 75%. And then you got about here 93 days after this moment. That should be on its way. Even if I took 93 days off that peak, it's getting close. So it's getting within that 75 to 80% to the apex. Now, if I was to turn this off and, oh my God, if I was to measure just this, is that fair? That's really unfair, but that's about how XRP likes to move. It likes to just... Okay, yeah, it's very fair. Let me move this down and just go off the actual play, which is what you should be doing when you do measured moves. Assume, let's just say the 10th is the breakout. 72 cents. Oh, no. Yeah, that's on linear. Yeah, about 72 cents. It looks a little cleaner now regarding the fibs. When you have it in linear versus log, it'll change where the fibs are set. The long and short of this is that measured move could actually bring you right into that 0.5 fib, which would solidify closes above the 382 and confirm automatic rally for XRP. Until we start trading above 60 cents, you can't really call this an AR in the micro. So yeah, I'm still looking for a break of that 0.5 fib. I'm still looking for a break of it into that 82, 83 cent level, perhaps even $1. This could really get going. And that's about how the coin likes to move. Just straight line, really exhausted breakouts that happen too quickly. One moment. I want to actually do a little bit of regular analysis on this and not just look at it with all these lines. All the lines are nonsense, by the way. If you ever watch analysts and all they talk about is lines on the charts, stop watching them. I'm helping you out. I'm saving you time. Okay, so here we have, we did get a technical structural high on this closure back in May, but we've gotten rejected, and now we are holding at a tight level, about 47 higher lows along the way. So low, higher low, higher low, higher low. Technically, it's clean too. You could see that if I was to draw a trend line, it would be solid. Now, we're just getting this horizontal level rejection around 55 cents. And again, I'm saying the same thing over and over again. No parties until 54 cents. Macro closures and with volume. I want to see with volume. And it's this break right here that's pretty clear. The 56, 57 cent level. This break right here was what broke this horizontal support. Let's just consider it from here all the way over 308 days. So that was a 1 year support that we broke. So at that break, you want to mark that point. And you look, while I hold my cursor, touch, rejection, and a touch perfectly. So that 56 is like really that line in the sand for XRP. If it could cross it and get some of these macro closures above it, that's what's going to send it up. And you could see at the next break right here, which is pretty nice because you got the break, you got this retest break, which led to that, that would be your technical bull trap. Anywho, that's about 70 cents. So turning on the fibs, that gets you right into that 0.5 fib territory. That would be like catching up to Bitcoin. It still hasn't caught up to Bitcoin regarding overall movement. But from lows to where we are right now, struggling. We need to get above 60 cents. But ideally, that 56, 57 cent target, that's what you want to put on your charts. You want to save that number. Until then, we are doing okay. Let's go over to Litecoin. All right. So over here on the Litecoin chart, we have the last halving event marked out sometime around August. And here we are leading into this early August. I believe it'll be August 2nd is when the next halving is. Back then, it lost 94%. One moment. So back here, it lost 94% before this insane rally into an automatic rally right below the 618. Here I have the same fib pulled where we go from the cycle high back in May of 2021 down to the swing low of 2022. And a little bit of a recovery now breaking on this biweekly candle above the 382, which is now confirming automatic rally, right? So if we start to solidify closures above this 382, that's a signal to you that this is going to be into its finality of the automatic rally cycle. And it did seem like we moved up perfectly into the last halving. We're now moving up into this halving. And I remember Bitcoin did the same. Even though we had the C19 crash in March, we had the last Bitcoin halving in May of 2020. We had the C19 crash in March 2020, and Bitcoin rallied like almost into 10K right before that, and then started to kind of chill out. So what we're looking at right here is what we normally see. Litecoin is just finally waking up, and if this is the event that people want to give as the reason for why it's doing it, then great, but ultimately it doesn't really matter. We just have to look at this as analysts, and we got rejected off the 382 for so many weeks. We're looking at about 120 days. Now we're finally getting back above it, so that is good. That's kind of like when you party. You get ready for the finality of this move. Typically between the 0.5 and the 618 is what you get, and I like this level right here at about $148. Let me show you why. I'm just going to put a horizontal ray. I said 148, and it's boom right here. Let me put it across the screen to make it very clean. I should actually make it a little thicker too. Boom. Okay, so you had here a couple of the rejections plus the bounce retest into this buying climax. Then you had a retest break coming down, then getting back above it, retest higher high, nice little bull trap, return back to that level. And then once you started solidifying a break below it, plus a rejection, plus the downtrend confirmed, that was where it was lights out. So now that we're back above this $104 level, which was the prior line in the sand support before leading into a selling climax, this is really the level I anticipated gravitating up to, that $148, $150 Litecoin. That's a textbook level, and the last time it got slightly above the 618. I don't think it'll make it that high. I don't know if it has the juice. We'll have to see. Is it possible? Of course, anything's possible in the matrix. And this isn't good either. You see this trend line that I just randomly pulled from wick high to this rejection right here to currently where we're at? It's pretty much kissing at this time. I'll leave that trend line there. If we could get above it, this would be extremely bullish, because if we did something like this with a back test above the 0.5, then that'd be nice. It's just we're getting really close. So I would keep this 145 to 150 level, 145 to 150 level for Litecoin in your, selling limit area. If you're somebody who wants to de-risk it. Now, again, that's not financial advice. You do you, but that's kind of where I'd be anticipating the next move based off of this whole structure. Oh, and look at how beautiful that is. If I was to extend this trend line out to the top of the automatic rally of the last cycle, it's right there, $147. How beautiful is that? Just going to take a quick sip of water. Okay, so there you have it. I mean, that level is pretty clean to me. We got about 145 to 155, 150 Litecoin. And it's a higher low structure, so it's looking okay. Let me see if we can find any. Yeah, that's about right. So on the downside, if this thing was to start breaking below this trend line and start closing below the 236, it is potentially coming back down to that $40 range. But it already back tested it, and it has yet to really go into price discovery. It kind of did an XRP where it never went up into a new bull run. So yeah, there's potential that this could really be in a full-blown recovery leading into 2024. That's what coins tend to do after halvings, even though that wasn't necessarily the case. That's what Bitcoin tends to do after the halvings. That's not the case for Litecoin, because you see after the halving, this had a devastating correction and then maintained lows for a pretty long time. I mean, from automatic rally to when essentially Bitcoin started to recover. So it just follows Bitcoin essentially. Keep that in mind. I don't hold any Litecoin. I don't intend to. I don't really see this as an opportunity personally for the long term, but if somebody wants to play the OG game and they don't want to get caught up in the nonsense of the memery of this market, perhaps you could balance yourself out. But with this lack of entering a new bull run back in 2021 with such a bullish environment across the board, that doesn't make me confident in holding Litecoin. I'd rather just consider ETH and XRP. So there you have it, the Litecoin analysis. Consider that level and consider this trend line. The level I'm talking about is 147. Whoa. Okay, we're looking at DAG Constellation now, which on this weekly chart has a clear as day, rejection level. It keeps happening over and over again. This is pretty hardcore. It's been going on for a long time. Wow. This is really wild to see how it just continually keeps getting rejected off these levels. If I was turning on a line chart or area, you see what I mean? Go back to the weekly. Look at that. Mama me. All right. How long has this been going on for? Yeah, 700 days. Downtrend, perpetual downtrend. Let's bring it back to candles on the daily, and we have some problems here. So this started to break into another lower low in June, plus rejection off of this key trend line, major trend line. This was your backup phase. Back in the last bull run, you had your automatic rally here, your spring attempt, and then jump into your SOS, buying climax, and then finality of the automatic rally. And this really likes to shoot up in a straight line. So now what are our losses on this? We've moved a full 94% down. Okay, so that's typical. It's what we usually see. Let me pull a fib. I'm going to pull the fib here, even though I know it's going to send us probably lower. Yeah, bad. That's real bad. Okay, the reason I selected to pull it off of this level, this is a bearish fib, by the way, from this swing low to that swing high in reverse, is because that was the break right here. This was it coming back up to confirm that as resistance. So I like to pull the fibs that way. And you see this 1618, we did come straight to it. So initially the 1618 here was gorgeous, textbook. And then we saw right here a rejection and started to close beneath it. That's not good. And then just continuation of the downtrend with this last test on that 1618 going back to March and perpetually lower lows since. That's not healthy. That's showing a lot of weakness. That's showing an exodus from this project. Retail that's invested in this, they're all leaving. There's nobody cares about this anymore. And the chart shows you. So this trend line is showing you that this rejection could continue all the way down to 2 cents. And that would really be where you start to see an interaction with the last cycle. So let me just show you this right here. Boom. And I'm going to put this trend line down to here. And you're going to see what I mean. Kickoff, automatic rally rejection, break into what became your finality of the bull run. And that level right there is 022. The problem here is if you start to break beneath that, you start going to Hades. You're pretty much right back to the past trading range of the C19 lows, because this is how big the horizontal trading range is. It's all the way down here at 006 cents. That's what Hex went down to, by the way. Hex went from 52 cents or like 55 cents all the way down to 006 cents. So if Hex can do it, do you think Constellation could do it? Yes, sir. So I'm not saying it will absolutely go back there, but that's your horizontal trading range that this thing was trapped in for 450 days before it effectively broke out of that resistance at 2 cents. So if it starts to break below that, you really want to look out. I wouldn't touch this thing with a 100-foot pole. It clearly had a nice breakout into the bull run. 5,000, 6,000% is incredible. A lot of coins did not do that, but it's over now. Like, we're in a whole different environment. All of this shit went up a lot because it was in the right place at the right time. That's all. And now it's clear as day that the investors are leaving it in droves. Be careful with stuff like this, guys. Bitcoin Cash. All right. So Bitcoin Cash is just like woke up. It's a straight line breakout of, almost 200% in a week. Very unhealthy straight line breakout. Let's look at the macro chart though. And we're going to go to the weekly. We're going to see how horrible this all is. So this is 2017. This is when Bitcoin was 19,000. Bitcoin today is trading at 30,000. This thing is down from those highs 93% from the 2 bull runs ago. 93% down. 2 bull runs ago. Bitcoin didn't even move 93% down from its recent bull run from 69,000 to 15. This thing is trash. Okay? Like, I get that it's pumping, and I get that people go to CoinMarketCap and they search what are the top movers for the day, and then they start getting distracted by this nonsense. I mean, really, who gives a shit if something's moving up for a couple weeks? I'm just speaking so directly to you guys because this continues to happen. When a coin gets exciting for a couple days, everyone starts wanting to talk about it. And it's like, look at the big picture. This is really it. And I guess that is nice for me to cover these projects because then I get to go over these more philosophical ideas and hopefully save people along the like not of course save you, but just remind you, to remind you of these basics and fundamentals and to keep practicing them. To never break away from the fundamentals and the basics. You never want to do that. Look at this chart all time and tell me what good you see in it. Nothing. It's went down from last cycle, 2 cycles ago, 97% losses. And from this wannabe bull run, it came down 94%. It never even broke into price discovery on the last bull run. And from this to this, it was a 60% down from high to high. It's not looking good. Okay. So when we look at this, if I was to just take this entire fib away, and we just analyze this based off of this high to this low, which we typically do, and I'm going to zoom in now, we're going to see that this did break above the 382, which is sending you into automatic rally territory, and that's typically what we expect. So now we're not trolling, we're being honest here. Let's look at where the key level would be on the horizontal range. It's pretty clear to me that it's right here. It's around 392. Let's just call it 400 on the nose. Okay. So you have here this big gap, obviously weird, coming back up to it, holding it for a couple days, rejection, coming back up to it here, rejection, coming back up to it again, back testing it, then entering this wannabe bull run, coming back to that level again, and then on the break of it, plus another retest rejection, confirming it as a very long-term resistance, we sunk down another 70-80% on this. I believe right now we're just gravitating back up to that level, and that's very typical. So coming back up to that level, perhaps making it up somewhere into this 480 level would be what I would consider. So something like this, and you could see why. Rejections, rejection, clean rejection, break, that level right there of, it's about $100 range, which is pretty big, And for right now, you have about 60% of a move. So how many people are just jumping in this thing now, as of the last 24 hours? Probably an overwhelming amount of people. Nobody was buying down here. People are just jumping in this random time. And ultimately, if you really look at the gains that it's making off of this low to this move up here, if it was to, it's 300 to 400%. What do I teach you guys about automatic rallies? That it's about 300 to 400%. The problem is most people don't want to buy at these lows. I wouldn't even care to buy at these lows personally on this project. It's really clear to me that this is at best gonna just chop around. I highly doubt this thing's gonna go to a new all-time high in 2024. I highly doubt it. It would be lucky if it even goes back to a double top of $1,600. And that would be in 2024. So I'm willing to bite my tongue. I'm willing to say I'm wrong if that changes course, but the chart to me is clear. This is going from 2017 to today. Really not so good. So we have a heart line in the middle of this, somewhere between $400 and $500. It's a very technical level. I do anticipate this could gravitate into those levels, but I would not be surprised if it even got rejected off of 400, rolled over at the 0.5 fib, and it could even have a dead cat bounce, and it could go all the way down to sub $50. That would be your spring. So let me show you the doom and gloom scenario. It would be your buying climax, selling climax, automatic rally. And this, if it is a spring, if I'm talking very macro, if this is a spring, then great. Then that would be solidifying lows. But if this in buying climax, selling climax in the micro to automatic rally plus dead cat bounce, then your line in the sand is about $75. Anything lower than that, you're going to have a true dead cat bounce, which is probably going to send you, it's going to get bad. And I could show you quickly how you could kind of assume where that would go. You take off the lows to where you might have a high in this next automatic rally, and you have your 1618 target sending you about $35. It's easy for that to happen in November, October. Very easy. Not saying it will, just showing you the scenarios here to consider. Let's remove that. Now we're looking at Reef. Oh my God. Wow. Okay. Where do I get started? Price discovery to the downside. Since inception, 96, 97% losses, very typical. Zero chart structure at all. Just perpetual downtrend for 700 days. Really no bull run at all. What did it go up 100%? Bitcoin's already up 100% from lows, so wow, this is bad. Bart Simpson head. Okay, Bart head. Yeah, it kind of likes these patterns, this Bart head pattern. I like to call it a crown top because we have here being the first part of the crown, this being like where the ruby would be. Yeah, this is not good. Yeah, we have made it down there. Oh, God. Oof. Yeah, it's touched that level. 001. It's going to drop another 0. Yeah. This is not good. 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 This thing really needs to get back above 004. And what did I say? 004. That's your 382 fib. It really needs to get above that. If it can't, it's just going to continue to show tons of weakness because these are really this is really your key pivot point at this time. So as I said, 004, that's your 382. It has to get above that. If it gets up to the 236 and gets rejected again, it's just like maybe it would be lucky enough to do this back test and then bounce, and then clearing that 236 could be healthy because of the back test on this 700-day resistance line. But yeah, this is trash. Okay, yeah, really nothing to say about this besides it could perpetually go lower. Taking off this pivot here to that, you're going to have a 1618 that we've already tested. So there we have it. And if this was to get back to that 236 level off of these lows, I mean, what are we about? 2.4? Somewhere about here. Oh my God. Yeah. Yep. So where does that send you? Into October, November. Yeah. All right. I don't know. There's nothing to say on this. It's poison. Moving on. We have VeChain. I know this is probably hard. It's hard for some people. Some people like they really want me to pretend that, but I can't. I know it'd be more sexy and it would make people like me more if I like tried to be positive when I look at a car crash. But that last chart was an absolute, like a murder scene. All right. Now we're looking at VeChain. Just some quick thoughts. VeChain also actually taking another leg lower, but holding and having a little bit of a bounce thus far. We probably have this trend line to consider. It's interesting that people wanted to talk about VeChain this week. It might be because of a statement that I made regarding XLM, because so many people were talking about XLM's pump. And I'm just like, yeah, guys, relax yourself. We'll talk about XLM maybe next week. I'm not sure. We already just talked about it. That's why I don't want to consider, but we're looking at pretty much similar moves off lows. You got about 57% off this recent low, and you're getting about 42% currently. Whilst VeChain, you have off current lows to where we're trading at, 54% up to technically 60%. If you were to go off this candle up to where we've traded 50% and 42%, it's the fucking same. So people just need to relax. It's weird when XRP or XLM moves to the upside, they get crazy. Like the people in those communities get crazy. Like I don't get why. It's really not my vibe. I kind of wish that stuff like would completely leave my sphere. I can't control it because again, a lot of these people are still emotional traders, emotional investors, and they're still super emotional about this, but they don't see clear, and that's going to get in the way of them taking profits when things get greedy. It's going to keep them from making good investment decisions. So getting back to our chart here with VeChain. Yeah, pretty in line with this overall trend line. So we would like to break above that. We would like to break above the 236 at this time. This is not looking so good. Gotta admit, gotta be 100% transparent here. And this is a position I hold. It's a position I took a lot of profits on back in the prior cycle, so I don't care where it goes next. I did really well on it. But now for this next run, thus far, this bear market for VeChain has been pretty similar to what we saw back in 2018. Big washout of the alt market, 95% losses across the board, including Ethereum. So we just saw VeChain lose 95%, pretty typical. And the reaction to its automatic rally was about a rejection on the 0.5 fib. Now, I do not think that this has the steam in it to get that high that soon. That'll be about a 200% gain off of current levels. Is that possible? I'm not sure. What I don't like about this chart is these continual rejections at this level right here of 0.33, I believe. Let me just show you a horizontal ray and you can see what I'm talking about. It's right about here. All of these rejections, rejection, and we haven't really been able to surpass the 236. So that looks like weakness to me. Let me pull this down a little more. That would be more clean, swing high to swing low. Let me also adjust one other thing. Let me just double check that I'm doing this. Yes, I am. Okay, I got to wrap up this podcast soon. I mentioned just some quick thoughts, but getting above this line right here would really be positive for VeChain and ultimately no true AR until getting above 4 cents. And targets between the 382 and the 0.5 are kind of where I would personally stagger my sell orders, because that's what Ethereum did in the last cycle. It did this 95% correction and then it came up right to the 0.5 fib. And it did have a pretty bad looking bear market structure, as VeChain also does. So keep that in mind if anyone's looking to de-risk. I personally probably will, depending on how this goes. But yeah, that's a generous move. If we were to have that left in us, that would mean we're kind of at lows. And could we have a deeper correction into October for VeChain? Absolutely. And that's why I have this level of a penny clearly marked off. You could see right there, rejection, then a little bit of a SOS followed by a backup phase that back tested 1 cent. So that's a very clear level to consider. I would personally be very happy to de-risk this if it could get back above 4 cents into that 5 cent, 6 cent range and then reaccumulate down at a penny later. We just have to see how it plays out, of course. But in the meantime, we're going to wrap this up. I hope you all have a beautiful rest of your weekend in the Matrix. Again, definitely make sure to watch that new Fed Now Decoded. I hope you enjoyed it, and I'll be having maybe in 2 to 3 weeks the Blue Moon August Decoded. That'll be part 4 in the Jubilee series, and we'll just keep building off of that as we go. So I appreciate all of your support. Hope you have a beautiful rest of your day. Much love.